What's up everyone, welcome back to my YouTube channel. It's been a long time since I made any technical video for you guys, so I hosted a free session for the community and answered your questions about traps as well as giving some tips about trap trading. Before we start, make sure to like this video, subscribe to the channel if you're new, and leave a comment if you have any questions throughout the video. Grab your notebook, get ready, and let's start. When it comes to trap trading, there is one thing that really matters and everybody should understand, in my opinion, which actually a lot of people don't understand. Trap trading is not your trading setup, but it's your trading style. You need to have a proper trading setup for yourself in line with your style, which is trap trading. And we're gonna go in depth that how can be like that to have a trap trading style, and what are there things that we have to pay attention or take care of it in order to get what we want, which is, ultimately is being constantly profitable, right? So let's get right into it. The first thing I need you guys to understand about traps is only and only, for me at least, it will help me to identify the macro or sometimes the micro direction. I will not enter a trade because I am seeing a trap. I buy or sell because of a trap. Now, when I buy it and when I sell it has nothing to do really with traps, and it's more on price action. So in terms of different setups, you should already know. If you don't know it, please go ahead and watch my free course and read my free book. You will understand a lot more about trap trading. So as we talked about it all the time, we either have a pretty much respect to a zone and then continuation, or we have a sort of break and retest and then a reversal. That's what mostly happens. So we want to identify price willing to continue in the direction or is willing to reverse. That's what we're trying to find from a trap setup. This will give us a clue about the next target. For example, on our chart right now, it's US 30. And I marked up 3 or 4 different calls that it was in the live trading sessions that we have every day. But I wanted to show you how it is part of a trap trading, while our entry really didn't have to do anything with trap trading. You will identify your direction using trap, and that's easy because we can find what 90% do and then go against them. So for example, right here in this triangle, so we have a resistance that being created, and all of a sudden a massive break to this resistance. Already with this break, you should know that a lot of people lost their money, those who sold and have their stop loss above the resistance. And at the same time, in terms of trap trading, when you're looking at it like this, you should expect that the resistance to be broken, because if you expect it to reverse, then you are a retail trader. You're not considering what 90% of people do. And that's the difference, basically. We just go against them. So we see all the resistance being created, you expect to be broken. And then once this break come back down, now you should expect it that it was a trap and it already tricked people into buy while took all the money from seller. Next thing I expect when I see a trap like this is my confirmation. I want my confirmation to say, yes, this was a trap. And when I think it's gonna go down, I am right. So my confirmation would be basically, again, one of those two pattern. And as you can see, we had price coming back to the support that was created before, and you can just draw it right here. You don't have to go and look, because when I draw like this, people say, oh, why not here, why not here, why not here? And they're absolutely right, because it's subjective and everybody says to draw it in a different way. But for me, it doesn't really matter where you draw it. It's more about what price will do to the certain area like this. If I'm about to see a trap, you will see it no matter where you have your zone, unless you're so out of line. So your zone should be somewhere between this range. Now you can have these lines as a support or resistance for yourself and say, oh, this is my zone, this is my zone, this is my zone. And notice the part that I mentioned or marked as a trap, it did kind of break the heck out of all of them. Even here with these VIX, thinking about here, all of them would be a confirmation for a retail trader in these lines, and you should have it in this zone. But for me, just because price shift like that, we always talked about shift, right? Shift out of a zone or out of a trap will clear a lot of things for you, such as what would be the next move for the market. So the moment I see price comes right back down, stops right at this support, stays in this range, and I will wait too. The moment price break it like this and comes right back up, notice all these bearish candles all of a sudden after price dropped something about 783 points, and then how bullish price action gets. Now this will confirm for me one thing, that sellers here lost their money and then they got induced to the sell again because the price point of $31,000, which was created before right here, is broken and price stays right there. So basically my zone is here simply because price created this low, stopped here, broke it, retest. Now I know price is about to go up. And for target, you always know that the high right here is at least the first target. And we talked about it. Same pattern. Resistance is created. You expect a break out of that resistance. And again, notice price action tells you here, price action tells you here, all of these, as well as this bullish engulfing, that momentum is about to be up. So the first thing I had was identifying my trap and direction, looking to see what is going on in the market. So this is Monday, this is Tuesday. When I'm looking at Wednesday, by the time on New York session, this closed, I think 1 hour before, 2 hours before New York session, bullish engulfing with a resistance that was there for the last 2 days being respected. So my directional bias, since previous trap also was stating that sellers are being trapped, and along the way sellers also being trapped, so our direction stays bullish. Now to confirm our analysis, we had this break and retest, and also we have this creation of resistance up there. And the last one would be this bullish engulfing, which is a price action confirmation. And now you also can use moving averages, which in my way, it would be DMA. It will help me to kind of confirm the trap setup. Now, what I mean by that, we had this right here as a resistance. Notice this resistance, we want it to be broken. So all these bullish candles right at this resistance, bullish engulfings, are in line with the direction that DMA tells me. Therefore, I can enter right here for this. So basically it's a 1 to 2, and this is 4 hour. I don't enter in 4 hour. If I want to mark it right here for you, we can go down to 1 hour and 30 minutes. I'll show you in 1 hour if you wanted to get in. Not really something. Let's go to 30 minutes. All right, so all around here would be entry because you have a cross to the upside. And also if you go to 15 minutes, you will see even better retest. So you see all the way down here, these are all when you could get in. And also around here, the moment price comes above it, you also can get in. Now in this example, is not that perfect. We're gonna find someplace in other traps like this week. I'll show you our entries again. But you see what I'm trying to say. The moving averages and price action can help you confirm your analysis in terms of you want to buy it or sell it. I'm seeing the resistance. I'm expecting a break out of it. DMA says buy, market gonna buy. And in the next day, you basically have no more confirmation. For me, I needed to come back to DMA so I can see what is next. If they actually respect it here, come back and respect around here before breaking it, then we expect a massive comeback. But they shifted and came right back down to range, telling me that, hey, they probably are not done, because if they wanted to go really down, they wouldn't break this zone like that. You wait here, it's almost 1 week of wait. And after break, price again shifts above DMA and give you the bullish engulfing while respecting the same resistance that was created before. You guys seeing it, right? Now, I'm going to confirm in start of the Monday New York session. It gives me bullish engulfing, the confirmation that my analysis is right, especially being after breaking the DMA as well. Now, there's two more that is left. This is not done. You just identified your direction and you confirmed it. Okay. So now you need a set of rules for acting and executing, which is your trading plan basically. For example, these bullish engulfings that I'm marking for you guys is really important. That's one of the checklists for me to have this bullish engulfing in 4 hour. Okay. Now that entry, guys, it's really up to you and how you're comfortable with. I'll explain what is my confirmations, but that requires having DMA because it will be changing by time frame. So for me, let's go to this one now. You just witnessed that in previous example here, I couldn't really find the entry that I want, and I'm sure I didn't get into that one because my original call was to 34,000 and this wasn't where I wanted. Okay, so let's go down to the lower time frame and see where I would get in here. Let's go on 30 minutes, for example. You see now these are what I really like. And notice DMA changed depend on the time frame. It's not the same period that you were looking at it in 4 hour and neither in 1 hour or 30 minutes. Each time frame has its own moving averages, and there is a reason and logic behind it. Actually, it's not a game. I spend a lot of time figuring this thing out. So right here is where bullish engulfing is closed at like 11. Nice. I have a bullish engulfing. It's actually right here. I have another bullish engulfing on 30 minutes also, respecting my moving averages. So this is where I get in, and my stop losses are maximum 100 120 pips on US 30. I hardly get in with 100 pips on US 30, and that's just US 30, not any other pair. My max stop loss is 30 pips. I don't even remember last time I got in with 30 pips. It's usually 20, 22, 3, 16, 17, depending on the setup. But in this one, I could get in with 120 and then 120 right here below DMA, and I get out of it with 600 points. The day after, bullish engulfing closes at 11 right here. That's 11. Notice perfectly comes above DMA. So I had my, let's just review it real quick. I had my understanding from traps. I identified the direction that price want to go up. I confirmed it by the bullish engulfings that I was seeing as well as DMA in 4 hour. And then I now come to lower time frame and execute and act. You can't really copy it. You gotta do what you're comfortable. Some people wants to see the accumulation like this. Some people wanna buy a sell candle, sell a buy candle. Someone like me likes to see bullish reaction to the DMA in a form of engulfing even in lower time frame in order to get it. And the reason is fractal nature of the market. Okay, so when I see a bullish engulfing, couple of them in 30 minutes that created the bullish engulfing in 4 hour, it has one and one meaning to me: we're going up. Or if it's a bearish engulfing in 4 hour and you come to lower time frame and you keep seeing bearish engulfing, it was all those bearish engulfings in lower time frame that created that bearish engulfing in higher time frame. So we act and execute based on our trading plan. Acting is the matter of entry, depend on the way you want. bullish engulfing, buy sell candle, I don't know, second leg M, wick rejection, whatever your backtest tells you to do. Your brain should understand it. Your brain and eyes should get trained. It's not about me, and it's not about how I enter. It's about how you are comfortable to enter. It's about how you understand it's the time for entry. You might get in Asian session. You might, I will actually show you. Let's just fast forward to this week. My entry on US 30 was here after this bullish engulfing, and my stop loss was only 50 points right here. 50 points. By the end of the week, price is up 1200 points, but I exited at 560 points right here. I'm not trying to lie here to you guys. I'm not trying to make you be like, wow, and think about me for the rest of the day, but I want you to think about opportunities and possibilities that you will have when you actually spend the time to understand your own game. Sometimes I want to see price around here to get in, and sometimes I just have enough confidence and confirmation to get in here, and I know the direction and I know everything. So it's me. You can't really be me without doing what I did. And you gotta go over all that backtest and experience and practice to learn the best time for you to enter. Obviously, backtest is a lot less expensive than going in real trade. I did a lot of backtest, but in the very early days, I experienced everything in a live account, and that's why I'm really serious when I'm telling my students not to start with a live account. I always started with a demo account. All right, so acting to entry is really up to you and your set of rules that you're comfortable, but it's also really important about your trading plan, which is the last one. Sticking to your plan. Sticking to your plan means about risk management, guys, and when you want to get in, when you want to get out. For me, if I can get a 1 to 10 in one day, I want to get out. Based on my experience, those of my trade that goes 1 to 10, 1 to 12, 1 to 13 will come back down either to accumulate more or reverse or whatever. But it's just my experience. When I get in at the very good price and I can see a good profit, it's wise for me to get out. So this is sticking to my plan. This is a discipline to stick to what you wrote on your trading plan. When are you going to go break even? When are you going to take profit? What is the percentage for your risk? And sticking to that plan is literally more important than everything I talked about in the last 30 minutes we are in a session together. Everything I said, you can put it aside and just spend time to understand the last one that I'm talking about, which is sticking to your plan. So the resistance is created here, and then price break, literally copy paste, break, trap people, comes right back down, comes to DMA, even breaks DMA, and then breaks another low. So the third step I told you, act and execute. I will not execute this trade because of DMA. You see, that's how you cannot copy people. You gotta find your own. Maybe you're good. Okay, this Friday is a perfect day for you to sell right here. Bearish engulfing, buyer's trap is 100% confirmed. For me, at least, this DMA is the target. So it would be an absolute piece of cake. 50 to 100 points for 400 points to the DMA. Price broke below this zone, came above DMA, and then before you know it, again below DMA. Next trap here. Now we see price coming above DMA. Now what do we see? Bullish engulfing. Where do we see? Above DMA. So I again have a trap which helps me know the direction. I confirm it with how price action comes above it, and then it gives me the bullish engulfing, and I act depends on how I like to enter. So for me, I will drop it to lower time frames, and then I'll find where I can have my entry with the lowest stop loss that I can, about 50 to 100 points, and then I execute. My getting out of it also depends on my trading plan. So if you get it in this Friday, you should get out end of Monday or Tuesday. My trading plan says don't hold on over weekend. So once price is around here, I get out. I actually got into this trade. I exactly remember 1 to 13 risk to reward, almost hours before market closes. We called it in live trading session that we had in both NY and London session that US 30 gonna go up. Notice the smaller time frame. We are right now in 1 hour. You can see a very micro little trap also here in this zone, while again DMA is bullish and we have some bullish engulfings as well. Fractal nature of the market, baby. So this was another perfect trap coming up here. This was actually one of the greatest trade that I had. I was really proud of it for my entry, for identifying that trap, for the timing and everything. It was just so satisfying. Before that, another resistance break. So this resistance alone with DMA being bullish and all those bullish engulfings that was closing above DMA, you see 3 of them, 4, 5, and finally push. Even if you miss this day, next day London session bullish engulfing. I don't think I was in this one. This one was actually Friday too, but I believe I was into this one, not that one. I remember this one candle. I think this was the miss for me. Unfortunately, in US 30, I called a lot of the moves, but I missed so many of them simply because it's at the end of my watch list. And I will be waiting for tighter stop loss very much. That sometimes I lose. Sorry, I miss it. And I lose it actually because of my tighter stop loss sometimes too, but that's beside the point. This resistance, DMA bullish, everything, price going up, makes the high, come back down. These are areas that I don't really know what to do with it, so I don't trade. The trap is not clear. The previous trap is played out, so I have to wait patiently for the next one, which that means 6 weeks of waiting until I finally got another trade. Why? Because I have the high now and they gave me the low too. They create the high, they created the low. Now my job is to wait and see which side would get trapped first, buyers or sellers. Then it come back down, hit the sellers, activate everything, bullish engulfing, and you remember this? That's my entry. I waited for that bullish engulfing and my trap is confirmed, bullish engulfing, another confirmation, and I got entry using my 5-minute DMA on this week when it was being created. I don't think I saw even like a second drawdown. I got in, pushed the blue, and then it was just push and push and push. I personally don't use key level. I use Fibonacci. That's a Fibonacci, just like DMA hack. I grabbed EMA and put my own understanding into that inputs. Then it becomes DMA hack. And same with Fibonacci. I created a Fibonacci with my inputs, which does everything automatically for me. Actually, I don't draw it myself. It will be drawn by price by itself. And that's the levels I care. 75% of the time, I call them GPG levels actually. Whenever one of those GPG levels are giving me a confirmation that is, whatever happening, it is close to a key level as well. I honestly did not study those. I didn't need to. I did study Steve Morrow when I was a student, but thanks to Forexia, I didn't need any other education after I learned the trap trading and then I came up with DMA. It was everything good. BTMM method, I honestly learned a lot from the Steve Morrow, so I'm not gonna bullshit you guys and saying, oh no, that's this and that. Definitely don't agree with them in a lot of stuff. I don't know, like the timing or that this specific time you have to be and looking for this. I don't really do that. And ICT, I think inner circle traders don't really know what they do. So sorry. The same example that I wanted to here show you on daily time frame too. You can see this is the Bitcoin chart. And if you are in my Instagram, you probably saw the video. If you're not, Golden Pips Generator, follow me there and I will share every now and then some of the trades that had a really nice setups and we called it live, all the before callings, the reasoning, and what happened after. I shared the Bitcoin where we called it at 58,000 for 32,000, which you can see where it is now, and also 24,000 and 17,000, which will be on the way. You can notice how price created the resistance, break it, retest it, trap buyers, bearish engulfing, and shift below DMA. Notice this is 58,000. This candle broke down here and came right back up. Everybody was celebrating that it's on sale. But we said, no, it's not on sale. It's going down. And we gave all those targets. Next thing you know, price is all the way down there. And even right now, they are creating the support that I'm expecting to be made. So price will induce from it. Possibly it might break 40,000 to induce more people before it push down and break this 30,000 again. Always same thing happens over and over. Yes, most of the time, but a little different between high of the day and low of the day. Like when you have an HOD or LOD, right? You want to see a kind of manipulation and then run away. It will be used, for example, in a form of daily structure. Okay, that price use that high and low to stop hunt and induce people. But when it comes to support and resistance, it's more of an 4-hour things for me, where I want to see 1 or 2 weeks of play around there and then one little bit of carry somewhere around it, and then price will change for me. I hope you got the difference. Support resistance is a little bit more macro. The more smaller time frame you go, more tricky you get. You need more and more confirmation using price action and moving averages or whatever tool that you have, to confirm lower time frame trap setup. While in higher time frame, it's like a piece of cake, man. Like you just drop that zone, see, okay, last 3 week price failed to break it. DMA says buy. That's it for me. But for you, you can say just look for that bullish or bearish engulfing if you don't have DMA, or just get DMA. So resistance here, DMA is to the upside, bullish engulfing. For me, this is screams by bullish engulfing, and then price all the way up to 1900. Along the way, same thing. Like it's always same thing. You can always look for support resistant trap in higher time frame. Based on what retail traders know, they have a certain understanding from the market. You need to watch the free mini trap course to understand more. Retail trader learn to buy the respect of support, sell the respect to the resistance. They also learn to buy the breakout or sell the breakout, right? So the moment price forms any of these, I go against it. If they break and retest it in a form of sell, I call a buy. If they break and retest it to the up, I call a sell. My direction is always against retail traders' understanding of the market. In my opinion, they don't even understand the market. Their understanding give me a direction of buy. Oh, they want to buy? Let's sell. Oh, Bitcoin at 64,000. Of course I don't buy anymore. And of course I change all my Bitcoin to USDT, because I know now that everybody knows and everyone thinks, oh, something that went from $100 to $64,000 will go to $100,000. Sure, but it's not going to give you the money. So you see, always I go against them. That's my mindset. EuroCAD right now, we have this massive range that we're waiting for it to be. See, you have to always wait for the first manipulation. So if they stay here and come up, give you the information, then you want to see a sell. Or even before information, if they trap buyers, you want to look for sell. If you see they trapped sellers, you want to look for buy. And once came up here, now you will see both of the traps together. But in order for you to make money, you have to see the first, act on the second. So for the GBP JPY that I see you guys ask, I really believe GBPs are gonna go down to the low that was created for the week, last week and then Monday. And that would be for all GBPs. Actually, when we called it here, it was down to this. It's on the way. I think it will trap sellers in Monday, sort of like Sunday, Monday, and then it will have a bullish move Monday and Tuesday. Then we can expect a midweek reversal continuation sell. Yes, I do really care about it. Previous high and lows for the day is a really good tool for me to find out if price is going to induce before the move. And as you can see, I have this session marks here. If you go to a lower time frame, you see when I have this high of the day, I come in London and I see the high is broken. First thing, wait for the induction, because now people are getting trapped in micro. And then once the induction happen, if it's in line with what I want, so right here, DMA crossed down, so I'll wait. Around here, if I can find a good trap in 4-hour, then I would be interested in these bullish engulfings after this break and retest. So retail traders will see sell. I'm looking to buy. Now, it's just matter of the confirmation based on your trading plan to get in and all the rules you want, which is a challenge. So just a recap, guys. First thing you need is to understand the traps, identify your direction. Then you want to confirm it using price action or EMAs, in my case, DMAs. And then you want to act and execute depending on your trading plan, and you want to stick to that plan. If you have to get out at certain points or you have to hold, you go break even. In risk management, everything, you stick to that plan. If you don't stick to that plan, no matter how good you be on others, it's not gonna work. And the last one is repeat. Show up and repeat this over and over and over, and hopefully some points your eyes will be trained and you will be constantly profitable. Thanks for watching, guys. If you enjoyed this session and learned something new, please share it with your friend and don't forget to subscribe and like this video. Until next time, peace out.